Good morning and welcome to today's webcast, Bolster Your Winery and Vineyard Operations with a Strong Chart of Accounts. Before we begin, I'm going to play a brief housekeeping video.
Welcome, and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions, which we'll ask throughout today's presentation. To respond to a poll, click the button next to your answer. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget to open a PDF file that you can save to your computer. Don't worry if you can't download your PDF certificate today. We'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. The attendance sheet is available in the slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit can be awarded only to participants registered as themselves and isn't available to participants who view the on-demand version. As a reminder, the presentation you're about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
And I'm pleased to introduce today's presenters from Moss Adams, Bill Vyenielo, Senior Business Consultant, and Carlo Lata, Tax Manager. Carlo, I'll turn the line over to you to get us started.
Emily. First and foremost, thank you all for joining us and setting aside your time this morning. My name is Carlo Lata, and I'm a manager in the Outsourced Finance and Accounting Group based out of our San Francisco office. Within the wine industry, I specialize in utilizing technology and standardized best practices to provide efficient outsourced accounting services, which in turn gives our clients key financial information to make better decisions. Starting off with our intentions for today, the goal of our webcast is to highlight how important a well-structured chart of accounts can be for your vineyard or winery, and how to thoughtfully and systematically design a chart of accounts that is tailored to the operations of your business, not only for the present day, but also for years to come.
All right.
Our agenda for... Oh, sorry.
Go ahead. Sorry, I thought you were on the polling question.
Oh, no. Yeah, here we go. Our agenda for today is segmented into 3 sections. First, we'll discuss what makes the chart of accounts so valuable to your accounting system, and how one that is well built can provide more than just a way to present financial information. We'll then briefly go over a number of challenges and items to consider prior to preparing a blueprint for your chart of accounts. Last but not least, we'll take a deeper dive into building a foundation into the design of the chart of accounts. Before you dive in, let's start off with a polling question from Emily.
All right, now it's time for the polling question. And our first question today is, are you planning to update or change your chart of accounts procedures in the next 12 to 24 months? And your options are yes, no, or I don't know. And I'll give everyone a few moments to respond. To participate in our polls today, please click the button next to the answer you choose and hit submit. take a look at the results. Carlo, back to you.
Thanks, Emily. So it looks like a good majority of the people plan to update the chart of accounts in the next 12 to 24 months. So that's a good sign. I think that's representative of what we've seen. Moving on. So here we're going to be talking about the importance of a strong chart of accounts. The foundation of any accounting system really lies in its chart of accounts. One that's really well built provides structure for managing your business in a uniform manner and also enhances communication across all parts of the enterprise. The primary function of a chart of accounts is to organize your financial data into meaningful categories, which really helps provide actionable information from your accounting system without a lot of time-consuming data manipulation. One of the great signs of a great set of financial statements is something we like to call the fresh reader test, meaning that a fresh reader of your financial statements, one that's not as familiar with the intricacies of your business, is able to easily read and understand the state and operation of your business. Being able to easily look up that information on your financial statements is a great sign that you've done your job in creating your chart of accounts, and that all really starts with the design of your chart of accounts. On another note, a strong chart of accounts is important in that it allows for scalability. A common mistake we've seen in design would be to tailor your business as it currently stands without considering future growth and the inevitable outcomes of a business's success. Building that flexibility into the system takes some additional time and effort in advanced planning, but doing this important exercise will save you a headache from having to revamp your chart of accounts every 2 years. Doing this also creates consistency, which is important to note since having an account structure that is constantly changing really makes it difficult to obtain comparable financial information from year to year. Moving on to the optimal times to update your chart of accounts. Updating your chart of accounts can be a really time-consuming task. Identifying when the optimal time to make these changes in advance is just as important as the exercise itself. There are many reasons why you'd want to go about making these changes, so we'll just name off a few key indicators. Starting off with the most apparent, the launch of your business is an ideal time to build a well-organized chart of accounts. It can be tempting to overlook the step and just go with a boilerplate template provided by your accounting system, especially if the amount of financial information to track is low. But really spending that extra time to build this out really goes a long way in the long term. Moving on, as your business continues to grow in size and complexity, you may find that your current chart of accounts to be lacking. Most common is just a simple fact that your business is growing into maybe different product lines or different locations, requiring you to update your current chart of accounts to better suit the company's growth. Another factor would be due to an acquisition, and you're being tasked with having to map the acquiree's chart of accounts into the parent company's chart of accounts. Another instance in which a chart of accounts refresh makes sense is when you're upgrading your accounting system. If you are upgrading, it's probably due to the fact that you've outgrown the functionality of your current system. With that said, this is a really great time to make substantial changes to the account configuration, as the new system that you've just acquired more than likely comes with more robust reporting capabilities. So tailoring your chart of accounts to make the most out of your new system's features is really highly recommended. And the last and probably most frequent reason for a chart of accounts refresh is when you find that your current financial reporting doesn't provide you with enough management information to make actionable decisions from. For example, an account structure that is too short, may require some additional work to gain any actual insight into the company's operations, which can really hamper or delay the decision-making process. Identifying when you notice this and taking action to make these changes sooner rather than later makes a world of a difference. Speaking to the challenges of updating your chart of accounts, one would really need to consider the various system limitations that come into play before you start building your blueprint. It may be helpful to jot down a list of these limitations and keep them handy as you work on designing your account structure. One example of a system limitation is knowing how many characters an account name can possess. Taking QuickBooks Online, for example, you're only allowed about 31 characters in each account name. That does sound like a lot of characters, but you'd be surprised how fast an account name can rack up that character limit. Another important limitation is the number of digits you can have in each account number. We'll review the importance of the account number methodology in later slides, but having a logical numbering structure can really sometimes make or break the effectiveness of your chart of accounts. But before you start building your numbering scheme, it'd be helpful to find out the digit limitation to save you time from having to redo this in the future. Most accounting systems allow for additional avenues to track information outside of just your basic account names and numbers. Using QuickBooks as another example, you can utilize the classes or location feature to provide an extra layer of classification within the system. For example, being able to classify expenses by different locations, different wine location, different vineyard locations, helps save your chart of accounts from being unnecessarily large or long. Lastly, you should consider the limits to your payroll services reporting capabilities. Most payroll service providers allow for the tracking of various departments within the system, but there may be limits to these classifications that you may want to ask your payroll provider about. On another note, there are even some payroll providers that allow a direct sync of the payroll journal entries to your accounting system, which can really save a lot of time in doing this task, which can really be time-consuming and error-prone. So doing that makes it a little bit more efficient. At this point, I'll be transitioning.
Well, I had
Bill has anything to add.
point I think I might add here. This is Bill Vyenielo. Another limitation oftentimes that's important to consider is really how many people do you have in your accounting team that can limit really or govern the level of detail that you're actually able to track. And also you want to consider the skill level of the people that you have on your accounting team and the commitment. Sometimes you'll have production people or either in the vineyard or the winery that you're asking them to record certain activities, and they may be busy doing other things. So you want to have a system that's easy for them to utilize as well. So I'll pick it up with the next slide here. Building a foundation. And really what we want to talk about here is it's often best to begin with the end in mind. You know where you're going to. What reports do you want to end up with that are going to give you the information that you need to really better manage your business? And so I've often found it's really helpful to research other reports from other wineries, talk to your accountants, talk to your friends in the industry to get a sense and some examples of reports that they find really helpful in managing their tasting room or their wine club or the winery production area or sales area. So you can often think of the chart of accounts as just a foundation to your entire accounting system. Just like the foundation to a home, that's going to govern the shape, the size, the features, potential, and the limitations of the house you build. The chart of accounts governs the level of information detail that you can capture, access, query, report on, analyze to really better understand your business's performance. So I often recommend start by identifying, or like I said, designing those reports that will convey through their format and content the information you need to easily see and understand the performance of every aspect of your business. You want to know, how's that tasting room performing? How are sales year to date versus prior year to date? So you can see trends across your company in the different areas. You want to look at your farming costs. How are they tracking versus budget? Are your farming costs coming in higher than budget? Budget versus actual, budget versus prior year, date. These are all things that you want to see, but the way that you set up your chart of accounts can govern how easy it is for you to actually achieve that goal. Next, you can often define the key measures, the metrics within each area of your business, and you can use those metrics to identify trends and establish standards to benchmark your performance against. Some examples, they might include cases sold, tons crushed, visitor count to the tasting room, new members added to your wine club. You can use, for example, the percentage change between cases sold to identify which expenses vary directly with the changes in sales and which expenses don't. So you'll have your variable costs and your fixed costs. You might have increasing labor costs in the vineyard or on the crush pad, and that might indicate that it's time to investigate some automation, such as mechanical harvesting or optical sorting. If you're looking at repairs and maintenance, abnormally high repairs and maintenance might mean it's time to look at replacing something. Or I know in my experience, one metric we used to track was how many vines were we replacing in a vineyard this year, and was that abnormally high? If it was, it might be an indicator that there could be a disease in the vineyard that we look into. So once you've got your metrics defined, think of using those consistently from year to year, because again, those help you to establish some benchmarks and standards that when you're busy and you're trying to read financial statements, if you have these standards defined, it doesn't take a lot of time to look at your financial statements at the end of a month or a quarter to really quickly assess where are we, how are we performing, are we on plan, are we ahead of plan, are we running behind? Next, what I would like to say is take a look at how your company is organized and designate cost centers, because again, this provides some structure to how you're going to set up a chart of accounts. And I'm going to give some examples here of how you might lay out those cost centers. Once you've got the list of cost centers you'd like to collect your accounts by, you can develop a list of the tasks, type of work, the jobs that are done within each cost center. And I'll give you some examples. We'll move on to the next slide here. Here's I think a good example of some of the possible cost centers that a typical winery and a winery that grows its own grapes and buys grapes might want to consider. So I'm often asked, what does it cost me to make my wine? Well, cost of goods sold is certainly what reflects the cost of what's sold that year. But you start breaking out these other cost centers below this, like the wine growing area or the wine production area. In the vineyard arena, you're going to have your vineyard development costs. You want to pool those, and those will eventually end up showing on the balance sheet. On the vineyard farming side, you'll have those, if you're using those grapes for your own production, they're going to go into your wine inventory. If you're selling them, they're going to be expensed every year off your profit and loss statement. In the wine production area, I like to see those costs broken out into these three buckets. The crush and ferment activity is a very high energy, high expenditure period of the year. The rest of the year, you've got the cellar activity, and then you'll have your bottling activity to finish off the wine. And then it's very common to have facilities that are used for multiple purposes. You may have your administrative staff, wine production staff sharing the same building. You may have a really large winery that can accommodate a variety of functions within that building. So capturing the costs for facilities, maybe it's lease, could be utilities, property taxes, things like that. Those can be assigned to a facilities cost center and then allocated in whatever way you decide to. A portion of that could go to the cost of making the wine, a portion of that can be expensed versus your sales activity or your administrative activity. And then in the sales arena, I've broken things out into marketing activity, cost center, and then more granular on the direct-to-consumer side, tasting room and wine club cost centers, and then the traditional three-tier trade sales through whether it's either domestic or someone's working on the export side. And then you'll have your general and administrative or G&A. And oftentimes this whole group of activities is often called SG&A, sales, general and administrative. Other income and expenses, that can be a whole host of different activities. It's not uncommon for a winery estate to have a ranch budget or to have guest homes, or in some cases, wineries will have an events business that's not really purely the winery's business. It's more of a side business. So it's nice to break out other types of activities apart from the winery operation into their own other income and expenses section. Also, this is where you would typically include interest expense and income tax expenses in the other income and expense arena. Next, I'm going to show how it's often helpful to group the types of work that you're performing within a cost center. Here we have side-by-side an administrative cost center and production, the cellar. And we have labor, so all the related labor expenses, whether that's wages, payroll taxes, benefits, 401k, and then supplies and materials or services that you might use, outside services you're going to contract for. So this is a pretty good structure to have that I like to see, starting with labor, followed by supplies and services, and then overhead from other parts of the business that you may assign to this cost center. For example, I mentioned when facilities are shared, it's very common to have an allocation of overhead from facilities assigned to your administrative cost center as well as to your wine production cost centers. Depreciation, non-cash item. It's often helpful to break that out and have it in its own area so that if you are doing some analysis and you want to understand your cash needs, it's helpful if depreciation is broken out on its own so you can eliminate that from a calculation if you're looking at your hard cash costs versus your overall income statement and even your wine production costs. A lot of depreciation goes into making wine because you have a lot of winery equipment and facilities that are utilized in this capital-intensive business to produce wine. And then at the bottom, I have transferred in or transferred out accounts. So oftentimes you'll have a cost center. You might accumulate all of your activities in that cost center, and you want to see what does it cost you to operate that cost center. But ultimately, you may transfer out some of those costs. A good example here, look at the cellar. You're going to be making wine through the course of the year. Oftentimes, it takes multiple years to make a wine. But during the fiscal year, you can accumulate the detail here within wages and supplies and services, overhead. But ultimately, you're going to transfer out to your bulk wine inventory those costs that you've incurred during the year. So I like to have the transferred out section broken out at the bottom of a cost center. So through the course of the year, you can see the detail that you're accumulating within the cost center. You can offset that with the transfer out accounts that I'm showing as examples here in the bottom. So we'll take a look at the following slides to sorry for all the detail here, but if you take some time to study this, hopefully you can see this well. I've found that over time, one of the ways that I've developed a matrix to help lay out the organization, to help you organize in a structured way, how to eliminate duplication of account names across the different cost centers. So I created this matrix here across the top. Each column you'll see the name of a cost center. And running down the left-hand margin, you'll see an account descriptions column. And what I like to do is first focus individually on each cost center, write down what accounts do I want to have, do I want to track within that cost center. And when you lay this out, once you're through that process, you can lay these out on the same page. You can start seeing where, okay, I'm obviously using labor in each one of these cost centers. I have workers' comp, I have payroll taxes. I might be using certain supplies. I might be using certain services, outsourced services in different cost centers. So what I've found is this will help you eliminate duplication and using different descriptions for really the same type of activity. So you'll go through, define what accounts you want to have in each cost center, incorporate them into a matrix like this, and then on the left-hand column, I build out this account's description, a list that you're going to use throughout your company. So if you're, for example, utilizing supplies in the office or utilizing supplies in the cellar, you can use the same code. Maybe a 3-digit section of your account code would be the same across every cost center. And can later on define in more detail using a sub-account specifically what that's for. And obviously in the account you're going to be designating what cost center supply is being applied to. So I think that it can get very, very complicated and confusing in trying to build a chart of accounts, but creating a matrix like this really helps you to kind of organize your thinking and eliminate duplication, establish consistency in the coding and the naming structure that you're using, which makes it a lot easier for employees to learn and understand and use your chart of accounts down the road. So I've been talking about kind of giving examples of cost centers and activities and how to organize those in a matrix. But a way to pull all this together is we're using the term build a foundation. And by that we mean create an account format that's designed to encompass the financial statement categories that you're going to see on the balance sheet and income statement. That's going to incorporate the cost centers and the work or tasks and activity that you're going to employ within each cost center. So what this format, by encompassing, I mean use a format which establishes a structure that employees can understand, that uses a consistent number of digits for every account, that designates a meaning to specific positions across the sequence of digits that you're going to use in your account code. For example, the first digit might indicate immediately, tell you that it's an asset or it's a liability, an equity, an income, or an expense account. You can actually use the first 2 digits together to designate a cost center. And then the next 2 or 3 digits behind that can reflect the type of work or the specific task that is being performed. And then you can have, say, another 2 digits behind that that would indicate, is it labor, is it materials, is it supplies, or some other activity that you want to track in more granular detail. I've often found, for example, tracking hourly labor is very, very helpful when you're trying to analyze certain performance standards within a part of your business, like the tasting room or on the crush pad. Recommendation on the bottom is use numbers for your account codes instead of alpha characters. Numbers enable you to query the information you have in your system in a multitude of ways. It gives you a lot of flexibility. You might want to say, I just want to see all the labor accounts, or I just want to see the expenditures for a specific cost center. You'll have all the same information in there, but the way your codes are designed will allow you to extract information from your system more easily. If it's purely alphabetical, which is often the way things come canned from a recommended off the shelf, the alphanumeric approach or the alpha approach is helpful in finding something just alphabetically, but then that's about it. You really don't have a lot of flexibility, nearly the flexibility that you have when you have a numbered accounting system with good structure to it. So next we have a polling question from Emily.
All right, our second polling question. Name the 5 main categories that the ledger accounts are grouped under. And your options are A, assets, credit cards, liabilities, money, and contact cards. B, assets, production, bank register, purchases, sales. Or C, assets, liabilities, equity, income, expenses. And as a reminder, if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions. This is our second question today. Give everyone a few more seconds. And let's take a look at the results. Bill, back to you.
Thank you, Emily. Okay, well, looks like everybody got this one right. So far, so good. So assets, liabilities, income, equity, expenses. Those obviously that's the right answer. I'm going to move on here next to the how to create a chart of accounts. So we've been talking about the specific areas to consider when you're thinking of designing a chart of accounts or upgrading a chart of accounts. Here we're going to actually walk you through the process in an example of how you might do that. So we'll go through it step by step. This first step is really looking at what we've talked about. You start off with financial statements. You're going to start off with a balance sheet. You're going to have an income statement. And what's very helpful is to assign a code, assign a number. In this example here, we're using everything that starts with a 1 as an asset. 2's liabilities, start with a 3 or an equity account for income. And then 5 through 9, those have been set up to handle a variety of expenses within the winery or vineyard operation. So in this case, in this example, all the 5s would reflect cost of goods sold. So that could be cost of goods sold for wines that you've sold. It could also be cost of goods for merchandise that you may have sold. It could be the cost of providing custom winemaking service to custom clients if you have that any aspect of that activity in your winery operation. And then in this case, we've actually included the production costs in an expense section of an income statement. Those are the 7s or the 6s. And I'll talk about more about how to handle that as we get into more detail here. And then SG&A, so sales, general and administrative expenses, begin with 7s. And then I talked earlier about other income and expenses. You might start those with 8s. And then 9s, I put this in here as a metrics bucket. Oftentimes what I've found with accounting systems is they come with a setup where it's easy to report the dollars, the dollar signs, the numbers generated from a financial perspective. But systems can often be lacking in capturing or tracking the unit measures that are really driving the dollars. For example, you might be thinking about tons crushed, cases sold, maybe the case equivalent of the tons you crushed, hours paid on the crush pad or hours paid in the tasting room. All those are metrics that we have on a day-to-day basis or monthly basis as we're running through an operation, but it's hard to go back and find those and dig those up sometimes when you're running a business. So creating a section in your chart of accounts where you can actually record some of these key metrics for a given month after month, by the time you get to the end of the year, you'll not only have an accumulation of the dollars expended within each cost centers, but you can have an accumulation of how many hours were expended on the crush pad or how many hours are expended in the tasting room. Cases sold. Maybe it's cases sold within your direct-to-consumer channel or cases sold through your trade channel, and then in total. It could be tons crushed for yourself. It could be tons crushed for your clients. If you have those numbers handy in your accounting system, it's very easy to go back. It saves you a ton of time when you want to go back and do some analysis of looking at trends or looking at cost per case or cost per acre. So just something that I found that can be a handy feature to have in your chart of accounts when you're thinking of designing one. Is I wanted to point out. So the next step 2 in this case, is thinking about your cost centers and what numbers to assign to those cost centers. Is often a big step in terms of creating the format that you want to have that's flexible and how to use it. So we saw an example of the different cost centers earlier on, and in this case, in step 2, I've shown 2 digits that you could use to designate the cost center. So we talked earlier about the 50s, 50 being used for cost of goods. So maybe 50 is your cost of wine sold. Maybe 55 is your cost of making wine for others, for other clients that you're going to expense this year. So it's good to space, maybe come up with a consistent approach on how many digits to track to have between these cost centers. So maybe it's 50s are your cost of wine sold for your own brand. Maybe it's 55 could be the cost of providing the services to custom clients, and so forth. So you can use the cost of goods for a variety of purposes. But if you do have, maybe you go from 50 to 55, maybe you go 50 to 52 to 54 to 56. Oftentimes it's good to leave a little bit of space between the account numbers, in this case the cost center numbers, because down the road your business may change and you may want to insert an additional cost center. So this is, again, Carlo mentioned about scalability. Allow yourself a little bit of room to modify your chart of accounts as your company grows over time. In the wine production area, wine growing area, I talked a little bit earlier about vineyard management or farming. It's nice to pool and capture your vineyard development activities in one bucket, in one cost center. So during the course of the year, you may have a budget set up, and in this case, you could actually set this up in the expense area of your chart of accounts, and you can then track. With some accounting systems, you can't track budget via the balance sheet. You can only do it via the income statement section of your chart of accounts. So I've set this example up where you could do exactly that. You could have the vineyard development section in your income statement section of your chart of accounts, and then have a contra account at the bottom of that cost center where you would assign or transfer costs up into the Vineyard value on your balance sheet at whatever time of the year you wanted to do that. But anyway, the example here is just give you an idea of how you might want to numerically designate what the cost centers that you've decided to have in your company. Next step would be looking at the activities that are going to occur within each cost center. And in this case, I've recommended that you use up to 3 digits. So we started off with 2 digits that are going to essentially tell you what if it's an asset, liability, equity, income, or business expense account, and what cost center you're putting it against. Then this activity section is going to be designating the type of work being done. So for a vineyard, it's pretty straightforward. If you're looking at farming, you've got your specific activities that you're employing throughout the growing season. You're pruning. In this case, I've got some examples of pruning or cultivation or harvest. Very easy to designate those, come up with a numeric system to designate those. And then with some of the other examples here, I have samples. That can be samples that are used in the tasting room. It could be samples that are used when you're selling wine through the trade. It could be samples that are used when you're doing quality controls in the wine production area. It could be samples that you're using for competitive tastings where you might be comparing your wines against your competitors. And so you're using your wine QC standpoint and a competitive analysis standpoint. So anyway, these are a list of some examples you might consider that are pretty commonly used across these different cost centers. Depreciation, if we drop down a little bit lower on the sheet here, we can see 900s. I often like to use 900 for the depreciation. And then we have what we talked about a little bit earlier, the ability to transfer accounts out or offset the accounts above it by using a transfer out or a contra account setting at the bottom of the cost center. And again, just above that, you have your overhead transferred in costs that you're going to want to recognize oftentimes from your facilities. It's pretty common also to have some portion, maybe 10 or 15% of your administrative costs assigned to the cost of making wine. So you're going to want to be able to transfer in some overhead in that case. So this structure here gives you that ability. The next step would be to break out in even more greater detail. For example, maybe it's labor. You may have labor that's occurred in the tasting room or the crush pad. Oftentimes that's hourly. So if you have a sub-account set up here, these sub-accounts are unique to each account. So in the example I provided here, I've used 10s to represent materials or supplies, 20s to represent labor-related expenditures, 30s could represent outside services that you're utilizing. And so on the labor section, you can see that there's much greater detail. There's salaried labor, there's hourly labor, bonus, vacation. That level of detail, if you want to have it, can be collected in and broken out in your sub-accounts. All those would be sub-account of the labor account, or within the payroll, taxes, and benefits area, and you can break out using 20s in this case, again, to designate that it's a labor-related expenditure. So at some point down the road, if I wanted to come back and say, I just want to extract from our system all the labor codes, you have a setup here that gives you the structure to query your system, pull it out cleanly. And at the very bottom right corner of this step, there's some example accounts that show how these all come together to create one account. So take a second to kind of walk through these examples. You can take a look at the for example, crush supplies. So the crush cost center is 63. So we'll lead off with, on this account example, 63, and then 811 would be the supplies. And if we wanted to go even more detail, a greater detail level to the sub-account level, we could use, in this case, I kept it very simple, just those are lab supplies. So I used a 10, but you could use an 11 to create for some other supply, or a 15. So just as long as it began, that sub-account began with a lab services. Again, it's a crush cost center item, so it starts off with a 63. We designated lab services with an 862. An outside service, so the 860s, or you'll see in step 3, if you run down the list here, we've got consulting with 860, or outside services 861. In this case, we actually broke out 862 because the winery was using lab services outside lab services at a very high level. Vineyard harvest labor example here would be, well, the vineyard cost center is 61. They're farming. The activity is harvest, and it's a labor expense that's hourly, so 21. Tasting room samples, 71, so tasting room expense. 710 is the activity samples, and 10 is it's a material that was used. So the other final step I wanted to show here is that oftentimes accounting systems come with their own features and capabilities. If you have a chart of accounts that's set up to work for a tasting room or a winery operation, it's not uncommon nowadays for businesses to have multiple locations. You may have 2 tasting rooms or more. You may have 2 different winery locations. But if your chart of accounts is set up, you can use the same chart of accounts for each location. So it's nice to have the ability in QuickBooks, for example. Carlo mentioned QuickBooks a little earlier. You can use classes, and in some versions of QuickBooks, you can use locations. So I thought I'd just add this in here to give you a sense for how you could utilize another feature of your accounting system to really help you have a consistent chart of accounts to use across multiple locations. Okay, so we have another polling question here from Emily.
All right. Our third polling question: which category do you think wages would go under? Your options are A, equity, B, expenses, or C, income. And for those of you that would like a copy of today's slide deck, you can download them now from the folder that says Slide Deck and Handouts to the right of the slide view. We will also be sending the slides via email after the webcast. I'll give everyone a few more seconds to make a selection here. And let's take a look at the results. Bill, back to you.
Okay, well, everyone knew the answer to that. So, correct, it's expenses. Okay, we'll move on here to the next section. Here what we've done is we've zoomed in on specific areas of a chart of accounts. So I'll kind of walk you through how a winery might set up. In this example, it's a section of the balance sheet focused on the wine inventory section. So you have a main account, you'll have sub-accounts. In this example, there are 5 digits used for the account. So it's, if you wanted to report strictly by the main accounts, the 12,000 or the 12,100 or the 12,500, you could do that. You could just see 3 lines, get a report that's 3 lines, a value for your bulk wine inventory, a total value for bottled wine inventory, total value for your dry goods, your bottling materials inventory. But having sub-accounts in this as shown in this example, the winery wanted to have greater detail, greater visibility and transparency on the contribution that, for example, grapes purchased or grapes produced during the year had to their bulk wine inventory. How much of a contribution their bulk wine purchases, their crush and ferment, their cellar costs had to going into the added value of their wine inventory during this fiscal year. So that's the reason for breaking out in greater detail. It made it a lot easier to say, what were our grape purchases this year? What was the cost of the grapes that we produced, that we farmed this year? It's nice to have this level of detail sometimes when you're trying to do some quick analysis. Maybe it's average cost per ton of grapes purchased, or average cost per acre of grapes produced, or average cost per ton grapes produced. The average cost per gallon for your crush and ferment activity or your cellar activity. Same thing in the bottled wine inventory, breaking that out to how much got transferred into your bottled wine inventory during the year from your bulk wine that was bottled during the year, what bottling costs got transferred out to recognize what was sold during the year. So I just thought this was a simple, clean example on how you might structure the chart of accounts for the inventory section, and how you could use codes, numeric codes, to be able to generate a very simplified view or a much more detailed view. And the way you'd use this would be at the very end of the year, after you've seen the tally, how much accumulated in each one of these detailed sub-accounts. At the end of the year, you're going to zero those out, roll them up into, for example, the bulk wine inventory, the grapes purchased, the grapes produced, bulk wine purchased, all that activity that's been incurred during the year. You will roll that up into the beginning balance to kick off the next year. But if you want to do some analysis, this can save you a lot of time to have things broken out at this level of detail. Next, we have an example of an income statement section. I focused on the case sales, sales revenue section. And again, you've got main accounts, sub-accounts, the ability to summarize very quickly. Here's our total wine sales revenue. Just give me the totals for the 40,000 account. Or if you want to break it out into what were our sales in the tasting room, the wine club, maybe any other DTC avenue, maybe you have a phone calling campaign, maybe you have events that are direct consumer. So this gives you some structure that is fairly common nowadays, but if you want to drill down, you have the ability with the account, the way this chart of accounts is structured. You've got the ability to quickly pull up the discounts. I see some more and more wineries now where they're tracking their discounts for their trade area as well as through their wine club private list. So you could have that detail broken out in your sub-accounts. And another important sales revenue areas for wineries that they often like seen to have broken out, you've got your shipping revenue, your tasting fees, and so forth. Grape sales, custom winemaking services revenue is a really important item for a lot of wineries. Next, we've got looking at the wine production section of a chart of accounts. We're just zooming in here at the cellar production operations area, but it's laid out with some of the most frequently incurred expenses, labor at the top, but then it also shows the facility overhead that was transferred in, administrative overhead that was transferred into this cost center, and then the other detailed accounts here, the sub-accounts, custom winemaking, cellar supplies, lab fees, etc. So, and then depreciation rolled in. At the bottom, you've got that transferred to bulk wine inventory. You could also have it transferred to custom client services. So having the ability, or having what I call these transfer to accounts, they can often be called like an offset account or a contra account. As you're working through the year, you can be accumulating costs within each one of these sub-accounts. You can see the detail. How much have I spent on payroll? How much have I spent on cellar supplies and lab fees as you go through the course of the year? when you want to recognize the value cost of that work that's been invested in increasing the value of your inventory, you can then use this transfer to bulk wine inventory contra account. Say if you spend $100,000 in cellar production costs through the year, you might then make it say, I want to recognize that $100,000 in my bulk wine inventory value on my balance sheet. You could enter a $100,000 offsetting entry in the transfer to bulk wine inventory account, keep all the detail in the accounts above it, and then show a debit against your bulk wine inventory value and an increase in the bulk wine inventory value. So the nice thing about this is you can keep accumulating the costs, the detail that within each one of these accounts, sub-accounts, throughout the course of the year. They'll all be zeroed out at the end of the year when you roll up all the accumulated costs into your case bulk wine inventory. But it's a nice setup to use to quickly refer back to what is it costing me to run this specific cost center if you want to do some analysis. So one more polling question here from Emily.
All right, our final polling question. True or false, there is a limit on how many sub-accounts you can create. And your options are true or false. And once you have completed all CPE requirements today, you'll be able to download a PDF of your CPE certificate from the certification widget to the right of the slide view. I'll give everybody a few more seconds. And let's take a look at the results. Bill, back to you.
Thanks, Emily. Well, almost 80% of our respondents replied false. And that is correct. It's almost really limited by your creativity. And the number of, there's a limit in terms of sub-accounts that's based on how many digits you assign to your sub-accounts. So if you, for example, if you had 2 digits, you've got 99 accounts, sub-accounts you could use. But again, they're unique to each account. You could have up to like 99 sub-accounts per account. So I did have, there's one question that was asked that I thought would be really important to address, and that's, what is the best time to improve or revamp my chart of accounts? And that's a really good question, because if you're in an ongoing operation, you find your chart of account needs a major upgrade, the first thing to really ask yourself is, will I need to design and start with a completely new chart of accounts, or can I modify and continue using my current chart of accounts? Both approaches have their pros and cons. If you've been limping along and you find that the upgrade is really, it's a major upgrade, it's often better to just rip the Band-Aid off and start with a fresh chart of accounts. Sometimes that approach, you can actually complete the chart of accounts designed faster than if you're trying to improve the one that you have. Because if you're doing that, if you're trying to improve the one you have, you typically want to keep and save the historic account information you have from prior years. So, and that's the benefit. If you are able to modify and improve a chart of accounts that you've been using, you do have that ability to have and draw on historic account information that you've collected over the years. So you've got important trend analysis that's easy to report on. But oftentimes it's fast and fastest to just go ahead and design a whole new chart of accounts. I've found that you want to give yourself plenty of time to do this. At a minimum, I typically have seen wineries take maybe 3 months or more to really think through the design of a new chart of accounts. And they often find it's best to implement it at the start of a new fiscal year rather than try to implement it in the middle of a year. You're also going to want to think about, if you're doing this near the end of the year, I say use 3 months or allow 3 months, because you're going to be going into your budgeting period. You may be, if you're on a calendar year, you might be going into harvest. So there are a lot of outside constraints to be thinking about when you're planning on when to do this. But make sure you allow enough time, at least I'd say 3 months, to go through the design, and that allows you to include other people other departments in the design of the chart of accounts. You're going to want to get input and feedback from people in your vineyard operation and your wine production operation, your sales and your marketing. That's what I had. See if we have it. Like we're right on time here, Emily.
All right. We are right at the top of the hour, so if you had any questions today that we didn't get to, you can keep submitting them, or you can reach out to our presenters directly, and they'll be happy to answer any questions you might still have. And thank you, Carlo and Bill, for a great presentation today. As a reminder, if you attended today's presentation in a group and would like to receive CPE credit, you must complete the group attendance sheet found in the slide deck and handouts icon to the right of the slide view. If you participated as an individual and met all certification requirements, your certificate is available to download now in the CPE progress window. I'll keep the webcast console open for a few minutes to give you time to download your CPE certificate. A copy will be emailed within 2 weeks should you have any difficulty downloading it now. Here is a link to an online survey where you can provide feedback for today's presentation. Please take a moment to complete this survey as your feedback is very important to us. Thank you for joining us today, and we hope you'll join us again next time.